Asian stocks scaled a one-month peak, tracking a Wall Street rally driven by expectations that the Federal Reserve could offer further hints of imminent rate cuts later this week. With the data calendar relatively light across major economies all week, all eyes will be on tomorrow's release of the Fed's July meeting minutes and Fed Chair Jerome Powell's speech at Jackson Hole on Friday for clues on the outlook for U.S. rates. Japan's Nikkei hit its strongest level in over 2 weeks and latest traded at around 1.9% higher, but the Chinese blue chips fell on continued worries over its gloomy economic outlook. Hong Kong's Hang Seng Index edged down 0.3%. European shares started off the day subdued as investors refrained from placing massive bets ahead of key data from the Eurozone. Looking at the all-share index, up 0.1%. Financials marginally lower, so are the industrials. Resources up 0.6%, and of course the small cap sector there up 0.3%. Looking at the currency picture, we're seeing a rand that's trading at 17.79 to the dollar, 19.71 to the euro, and 23 rand 14 to the pound. To give us perspective on the markets, we are joined by Martin Smith, who is a portfolio manager at Anchor Capital. Martin, thank you so much for your time. As we look ahead to the Fed minutes tomorrow, we've got Jay Powell's speech at Jackson Hole. What do you make of market sentiment right now?
I think market sentiment is positive. I mean, we had a little bit of a sell-off a couple of weeks ago, and everything seems fine again. The world is fine again, as it seems. And I think everyone, like you mentioned at the beginning of your show, everyone's looking towards rate cuts. And that's the kind of big driver of optimism around the markets at the moment, both kind of offshore, and that obviously feeds into the South African story as well. So for now, everything seems positive. But as we've seen with the market in the last kind of 6 months or so, it can change quite quickly with just one data point. So for now, optimistic, but let's just keep a close eye.
So with that optimism, and now that you say that anything can change between now and the next Fed meeting, I think we've got 3 data points to look out for, including the jobs reports and the CPI data as well. Where are you leaning right now? Is it more thinking that perhaps we might get the soft landing, or is it still possibly a hard landing, given that statistics says when we get to the end of the rate cycle, typically in the US, it does follow a recession?
It's definitely been the talk, and I think that's kind of what sparked a little bit of a sell-off we saw at the kind of back end of 2 weeks ago. But depending on who you speak to and which analysts you chat to, from JP Morgan and the like, they're saying the chance of a recession is between kind of 30 to 40% at the moment in the States. Does it become a hard landing? Not our base case, although you never quite know what pockets of debt get uncovered in these things when the market and the economy starts to kind of tail off. So you never are 100% aware of a hard landing before it comes. But that being said, I think soft landing is probably where we're heading to. But again, there's so much still to come, and we're moving data point to data point. I mean, even just with rate cuts, I mean, we were expecting 7 at the beginning of the year, went all the way down to expecting no rate cuts a couple of months ago, and now we're back up at about 2 or 3. So I think everything is very much in flux in this market, and we just try kind of play the ball as it lies, I think.
A little bit earlier on, we spoke to Simon Baloyi, who is the CEO of Sasol, because the company released their earnings. Was there a key takeaway there when it came to Sasol numbers, or is it for you more about the strategy and where Sasol is going under Simon Baloyi's leadership?
So, I mean, Sasol, obviously, we had that trading statement last week, so the market was a little bit aware of what these numbers today would look like, the full year results numbers. But I think the thing that took the market maybe in a bit of a negative spin, and I see that the share price is down about 5% at the moment, is the dividend policy and the fact that you weren't getting a dividend at the end of the 6 months. So the market didn't like that. But I think also, not just from a shareholding perspective, also just kind of what that signifies. Obviously, they need to be prudent insofar as not declaring a dividend when they need to. But I think the market's looking through that and saying, do we want to be kind of invested now if this company is already kind of pausing their dividend or has a new kind of dividend policy? The chemical America business also didn't do too great. So you've got those things. You've got oil maybe going nowhere at the moment, and Yeah, I think the market maybe is a little bit skeptical about kind of performance and those types of things around Sasol. So I think there's just a lot of question marks, and I think today's price action just kind of reiterate that.
Speaking of skeptical, I was skeptical yesterday looking at ABSA's share price movement after they announced that their CEO is stepping down. Their numbers didn't look too great, and what I would have expected the market to do, it didn't do any of that. So I can't tell whether the market is happy or not.
Yeah, I think that's sometimes the case. I mean, you even had an instance last week where Starbucks announced their CEO was going, and that share price went up 25%. They got the Chipotle CEO to come across. So these things can kind of move in ways that you sometimes don't foresee. Insofar as ABSA itself, it's a share that I like. I think it's maybe kind of lagged the rest of the banking sector, and I think it still looks a little bit cheap. And if you see a continued kind of momentum in this SA Inc. kind of basket rally that we've seen in the last couple of months, I think ABSA could play a bit of catch up. So I think it's one to maybe keep an eye out for.
One day you and I will have a conversation about why you like ABSA so much in relation to its other peers. But I want to talk about when you see the macro data, whether it's the US or locally, and then when you hear the CEOs and their forward-looking guidance and their outlooks, what matters to you? Is it the macro data or is it what the CEOs are saying?
I think it's got to be a bit of both, right? You've got to have a top-down view of the macros, and sometimes it's more important than other times. At the moment, it's very important given kind of what's been happening with interest rates and expectations and how that has just moved sentiment. And then there's times when macroeconomic data isn't as important and it's just bottom-up stock picking. So there's also cycles insofar as the kind of importance between the two, but they definitely speak to each other. So I think you've got to, again, take a very kind of overall look at everything. So macros and the data from the stocks themselves, and also just insofar as management teams, and some management teams are very good at delivering on what they say. Others you've maybe got to take with a bit of a pinch of salt. So it's about kind of combining all these things together and trying to form a view from there.
Martin, thank you so much for your time this afternoon.
Thank you.
That is Martin Smith, who is a portfolio manager at Anchor Capital.